That's sort of mind-blowing to think that yields in the U.S. could go to zero. What would the implications be for equities in your view?
Well, it certainly wouldn't be good. We've never seen rates that low. And one of the reasons that yields have been as low as they have is because they're so low in places like Europe. I mean, that spread can only be so wide. So we certainly hope that doesn't happen. But you've seen commodity prices rising. That's why you see an interest in gold. You also see people going to other perceived safe haven assets like cryptocurrency. So I think certainly we'd see commodity prices go up. We would see that sort of flight to safety as well. And then you're also probably going to see an interest in some of the more dividend-paying stocks, which is what we've seen in the past when we had low yields. So in some cases, things like communication services or staples or utilities, the valuations on those sectors have already gone way up. And I think we're going to see those things get priced even higher. So you're going to create more asset bubbles in typical safe haven assets where you would go to get dividend yield.
Katerina, there's always been an argument that the lower the yields go, the more cushion you have in terms of equity valuations. Is there a line in the sand for you at which you think, at this yield in the 10-year, things look bad? It's not that valuations can go higher. It's that this is signaling something else.
Well, I certainly see your point, and I agree that the possibility of negative yields is not a good thing, but we're not quite there yet, and we have to keep an eye on the price and kind of just take a big picture into consideration. And our view is that recession at this point is not on the horizon. We see overall economic slowdown, of course, here in the U.S. as well as globally. But we have to consider the fact that earnings have been pretty good. 85% of S&P companies already reported, and so far so good. So we believe that while the market is slowing down, we're still in the midst of this bull market, and there's still opportunity here.
Tom, we were discussing this blog earlier and how interesting it would be, because there's not just saying that it's because, as Randy had mentioned, what's going on with central banks around the world and the pull lower on yields, but also secular behaviors. People are living longer. They need to save more for longer periods of time. And also technology is cost cutting. I mean, it's savings for us.
Well, you're taking money. You're taking money from savers, and you're giving it to borrowers. I think Randy hit it exactly right. 0% rates in this country is possible, and if it happened, it's probably bullish for equities overall. But it gives rise to a concern that businesses will just become so levered. Because capital is so cheap. We're seeing 7, 8, 9, 10 times EBITDA LBOs in the private markets. If ever rates came whipping back, we'd have a real problem.
Well, it does alleviate one issue that's been a concern, and that's corporate debt. People are concerned about the massive amount of corporate debt, which is there because rates have been so low. But they can continue to roll that debt over at an even lower and lower and lower rate. At least in the near term, it solves that issue. But then at some point in time, if rates do go back up, then that becomes a problem. But it pushes that problem further down the road, I think.
You would think, though, that, Katerina, we've already seen rates come down significantly. I mean, right now we're at 1.67 or so on the 10-year yield. And you would think that in this environment, small caps would do well. But small caps, I think, for the second day in a row, closed below its 200-day moving average, really underperforming the broader markets. Is that a sign to be concerned about?
We have to obviously keep an eye on it. But once again, when we're looking at indicators like this, it's important to keep to take the big picture into consideration. And while we tell our clients that these times, like, for example, the trading day on Monday that was, obviously really disturbing, is really not something that should tell us that we need to change our entire portfolio and our entire asset allocation. So when we look at small caps, definitely play a role in the portfolio. As this changes the allocation piece of the portfolio, this will be a good time to rebalance.